There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Software strategy session, risk management discussion, general droning on by yours truly as the risk manager of Auvoria Prime. We start off the weekend as always, and maybe sometimes, with the FinViz charts. So with the FinViz charts, really the key is and I'll sometimes position this for clients as well, just use it as a dashboard, right? Just charts, just looking for a broad macro overview. You're going to see some developing trends. You're going to see some correlated markets. It always starts off at the top with equities. These are equity indexes from around the world, Japan, Europe, and the US, from tech to small cap to a very efficient exchange, any inefficient exchange, the Dow Jones, which is 30 stocks weighted by price, not by capitalization like the S&P 500. So it is an inefficient index. So looking at the S&P 500, the DAX, the Euro, even the Stock 600, which is more like the S&P in Europe's better measure of overall health of the market. So fixed drop down, no surprise. I think this war is starting to grind on everybody. But as always, our hearts and prayers go out to anybody that has been affected by the war in the Ukraine from Auvoria Prime and myself. It is an unfortunate event. So, but I often joke with employees and clients, I like the Toyota commercial the best, even though I don't own one, because it just says moving forward, right? So we're learning from the past, but we're moving forward. And I think that's an important thing to teach in today's youth. Many get mired in things they cannot control and it's spending way too much time trying to change things you cannot have any large effect on, right? The only thing you can have the largest and the greatest effect on among many is one's self-opinion, confidence, education level, right? The social status at the end of the day, unless you're Kim Kardashian or a few others on this planet, nobody's going to remember you in 20 years. So it's wise that from a risk management standpoint, take less time and focus less on being a narcissist and focus more on risk management, right? But that is just my social comments for the week. I think if many that spend a lot of time taking pictures of themselves took maybe 1/16 of that time and educated themselves on how to invest, I don't care if it's in real estate, commodities, equities, trading forex, you name it, they would be far better off down the road in life than they are spending time on Instagram. So there's my rant for the week. Has nothing to do with Forex, but it all is comments related to risk management. If you guys are having any issues hearing me or on this OBS stream, please hit me up on Telegram. I have a channel we try to post some good stuff too. I've begun to post a little bit of pieces from the macro compass on Telegram. These guys are some of the best. You will continue to see some pieces to them. We actually have a corporate subscription now to some of their research at First Down for our clients. So with that being said, let's go into it. The rip-roaring face rip rally, dead cat bounce, whatever you wish to call it in equities, is upon us. This happens very often when a market gets too oversold. Remember, I talk a lot about those Keltner channels and Bollinger Bands. We were certainly touching them down here on almost every time frame. There is almost always a snapback or a barbecuing of the shorts that takes place. And I think the biggest surprise is usually what takes place, and that would be new highs in the equity markets, right? A lot of people out there see a big bad bear. I do as well. But I always look for what's called max pain in the markets, and that is a face rip for the shorts, right? Once you get everybody in a particular position loaded to the boat to one side, you can almost bet it's going to tip, but then wind up flipping to the other side. And that is most of the efficient based markets around the planet. All right. Although this was a hell of a rally. I think those really in heavy tech stocks that got really clobbered over the last quarter. This is going to be sort of your saving grace to lighten up the portfolio as we may rip into new highs. But if we make any dramatic moves with client funds, which more than likely we will if we start hitting new highs again, you guys be the first to know. All right, Forex Factory. Actually, you know what? Let me take a quick peek of. Let's just scan down the rest of the dashboard first before I jump ahead of myself here. For those that shorted oil in the 130 to 140 area, bravo. I probably would hold that trade. May get another chance to load up short again. That's all I'm going to say about this, the energy space. Now, what is kind of disheartening here, if you're looking at 30-year to 10-year, 5-year, and let's just actually take a look at the 10-year U.S. Treasury. I just want to see this on a weekly. A lot of times on the weekends, I'm doing this with you guys real time. Like I haven't looked at this before, right? Because I want you guys to see what initial comments I'll make when I'm looking at these charts rather than just some sort of canned presentation. You guys are catching it live, not Memorex. In any case, this is what's happening the entire, what are we looking at, 5 years, 10-year note. And this isn't the easiest to see. We're not really focusing on individual weekly candles, which is each of one of these are. We're just focused on a general trend. Okay, so obviously coming into pandemical, markets were way up, right? Demand was very high for bonds in general. I don't care if it was the 10-year, 2-year, it was an area of safety, thus the price has gone up. Okay. So as the price goes up, the yields were way down. This is when Treasury prices were the highest. This is also when mortgage rates generally were the lowest. Now we're seeing the opposite take place. So in the 10-year, it's gone from approximately 140 down to right around 125. How much has it lost, right? So it's lost almost a perfect 10% from the high, right? So you can basically count on everything else. As prices come down, yields go up, right? That's why money markets are showing a little more signs of life. I don't know how much life in your money you get when you're getting 0.3 versus 0.1, but it is more. And you're seeing the price of a lot of bond funds, not as nearly illustrated here as it would be in the daily chart. They've lost value this year. I mean, here's where they started generally. What you're looking at, 4%. That's just in the 10-year. Doesn't mean your bond fund's down 4%. Just means that they've lost that. So even though they're paying income to you, the value of the portfolio has gone down. More than likely will continue to go down if the Fed starts signaling, which we should start to catch more of a wave of a deeper sense of where they're headed in Tuesday, when our fabulous chairman, and I say that facetiously, our fabulous chairman Powell speaks Tuesday. What the hell am I saying? It's Monday at 10 a.m. Okay, and let's see what he's doing. Didn't speak economic and national session. All right, so this is usually just some canned ass presentation. It's not really going to matter much. I'll tell you though. I mean, I always joke that if they ever open these things up for Q&A, which occasionally happens, it's really rare that any central banker speaks out of turn. But, I always liked it when a few comments would come out from Christine Lagarde, who I regard as a very smart lady, run the European Central Bank. And then certainly currency markets can go crazy when comments are made, but typically these types of events, they've released the notes before. It's a very canned presentation. Nobody expect any craziness. You never know, right? I could be wrong, but generally that's what happens. So, but as the week starts to develop, I think the markets obviously want to see some sort of settlement in geopolitical events, right? The unknown is the unknown that always could escalate into a more involved group of country global tensions, right? I don't know. I hope I'm totally wrong on this. But for now, we have an oversold situation. Call it a dead cat, call it whatever you want. We are rallying. So consequently, dollars going down and most of the other pairs are going up. So let's take a look at what else we got. Do note this, guys. Everybody in Europe got a lot of subscribers for Auvoria in Europe. Daylight savings time. It's a week off of the US. That always would screw me up. What else? So we have Powell speaking on Wednesday. Let's take a look at this. Emerging challenges for central bank governors in a digital world. That's great. Maybe somebody will bring up some Bitcoin in this discussion. Wouldn't be too concerned about this, but as always, any red event could bring any kind of volatility into anything. It is your responsibility to know the red events and how they possibly could affect anything you're trading. When at all concerned or just not as sure about what's going to happen, there's absolutely nothing wrong with not trading. As I often have heard, one of the best pieces of advice I've ever received from a big trader in New York was being in cash is a position, right? Because, in the old days, everybody's like, I got to take positions. I got to put some trades on. Like, being in cash is a position. Just remember that. Enough of that. Let's go back to the rest of the charts, see if we can discern, read anything from the tea leaves. Yeah, so I think we've covered, note the, you could even argue that there was a little bit of a spread difference too, but look at these two. I mean, it's just a continue unwinding of the short end of the curve. Crazy. So U.S. dollar, no surprise, pulling back. We've had some real rippers. Do note, and maybe I should just go into currencies in here instead. Do note that got a pretty solid support line here at this 97.75 area. It's held a bunch of times, almost 4 times. Is that right? Daily chart. Let's see what we got. Let's see this on a bigger scale. Yeah, that's a pretty solid line. The problem, it's tough to tell, and you wouldn't use it from something like this because there's really sort of no volume read on anything like this. But typically, when something blasts out of a region, in this particular case, I don't need to see the volume. I can just kind of tell from looking at how the other currencies move from a volume. You actually had, I'm pretty sure, a whole host of what's called other time frame players stepping in to take us out of this area and into another one, right? Maybe not as much so in equities, but certainly trading almost everything else. Um, I shouldn't say that. Completely scratch that. I spent too much time on the beach yesterday. I must be baked in the sun here. The other time frame players, which is a market profile term, we just call them OTFers. The other time frame players is really nothing more than just a general term for a whole bunch of large institutions that have decided to step outside of whatever time frame they're on, right? We call it the other time frame. Doesn't matter what it is. The point is that as a group in the aggregate, if they decide to take a market somewhere else beyond a support resistance levels, in this case it was resistance level, blasted off, it now becomes support. And many times the first couple of tests of this area can be bought hand over fist. I don't care if it's a stock like Nvidia trading at a particular level or a commodity. If there's been big volume where we came up out of that area, a lot of participants, if you will. I'm not talking about a bunch of knucklehead retail traders, right? I'm talking about institutions taking into upper areas. Then with some relative confidence, you could take the first pullback into that area, right? Why? Because more than likely, these positions that whatever the groups are, put them on hedge funds, sovereign wealth funds, banks, there's all kinds of trading groups, right? Family offices, any of these large institutional investors, they're going to defend their position because in many cases, they put the position on for a long period of time. So if they're going to be standing there defending it, um, many of them will load back up at these points if maybe they needed to accumulate more of whatever in this area. This has really nothing as much to do with any particular Forex currencies chart as it does with almost any other chart. I mean, you can literally put this particular chart out for any investment. Ideally, the one I've shown many, many times in the past, it includes some volume, right? So we'd see an absolute increase in volume as we were taken out of this particular area into a new area, right? One time framing up each day, right? Each day is higher than the previous day. That tells you usually if volume accompanies it and it isn't based on some catastrophic reactive event, right? But if it's, you could certainly argue that partially was the case here too, but um, it usually will tell you that, hey, you know, all the freight trains have either blasted through the station or they all left in unison. Why on earth would I step in front of all these trains, right? I'd rather grab the back of the coattails of these trains and ride it, right? That's a concept that's very powerful in risk management that many traders don't understand. And it's all based on auction market theory, which is nothing more than just sort of a collective group of concepts that involve understanding what big traders or groups of large traders do in unison. Does that make sense? So you can always Google that. I've held a bazillion presentations on this concept in the past. It's all over YouTube. Check it out. So, what else do I want to address? Let's go back in actually and take a look at Euro. So everything I just said from the exact opposite is completely the case here. So you had some players in this particular case. Look at this. Really wasn't like a lot of volume. So it would be like, hey, Steve, I hear what you're saying, but look, there isn't a lot of volume here that's brought us down into that area. And you could argue there was more volume here, right? You could split all kinds of hairs on this, but usually a move into this that's somewhat participated in by large groups, it's defended against. Doesn't mean it's going to be defended here, right? But usually that first crack up into this, it's totally low risk short in this case, back down. So I would hope that those designers of algorithms to trade whatever typically take this first pullback. This is called a slingshot trade, if you've never heard this term before. So and there could be all kinds of other stuff up there, right? There could be moving averages, could be fib lines, can be an aggregate of market profile stuff, which is everything you see on the left, right? All holding against, could be missing notches in the profile. I mean, there's a whole host of things that could come together in areas of confluence that will keep you from moving into these areas. But the first shot back to, especially a big moving average, very low risk trade. One of the lowest risks there is, and it still follows all the rules of being in a trend following trade. All right, moving on. Pound. definite resistance here. This whole zone. Remember, it's not just some. I always like to say it's a zone of resistance in forex. So the one spot three, it's like the 3,200 area, somewhere in there. CAD support in this case, spot 2604 area, right around the century mark at 2,600. This, I can't say this is a surprise, and in all fairness, I'm not the best analyst when it comes to anything yen based, just because it always seems to act on its own, like the Swiss does. So the um, I think what is a surprise that we've just really blew through on this upper. I mean, I almost have to go to a monthly chart to see what's going on here. You kind of need to stretch this out so you can see many. The problem with showing these longer term charts, and I always hesitate to, is because oftentimes someone will say, well, look, this is a long term area that's all the way back to December 16, right? The problem with that is that who's going to defend that, right? I mean, who's been holding a short position in the yen for 5 years in this current climate, right? I'd be surprised. Who knows? Maybe I would be surprised. But I mean, outside of just the biggest they're holding, they're nervous right now, obviously, because it hasn't really held. It's already lifted above its highest point. And this would be the true um, what I like to call scene of the crime. By the way, here's another great example of a slingshot. Now this is on a much longer term chart, but notice we totally broke. If you can kind of see this whole line I'm drawing with these crosshairs, but see how we broke this area and it did come on volume, right? We came back to this, albeit many months later, but it was a slingshot short. This is a very safe trade short. I don't care what chart. The longer term, the better, obviously. So this is probably one of the better illustrations I've shown in a while of a long-term slingshot. This paid handsomely for those that held through the next few months. It isn't always the easiest to do. That's why I tell you guys, think like an institutional trader because they're putting these positions on. Problem is that after these slingshots take place, if we come back to the scene of the crime here, all bets are off, right? You'll usually blast up above it. Then it becomes a lot more murky trying to figure out statistically the odds of the trade working out in your favor. What else we got? Dollar Swiss. Let's go back to daily. Ooh, it's flat. No, it's not. Let's see. Rejection at damn near par. Gotta love that. Australian dollar US above the line for the first time since, which is a big rejected area, by the way. But this is kind of held. I don't know. Can you argue that held? Or break above it on the daily? Dollar could be getting weaker, obviously, as all the other stuff rallies. Why? Because all the risk assets are being put back on. Dollar being sort of the take the risks off trade, along with bonds and cash and other areas, right? CAD Swiss pullback underneath resistance. Another launch here. The Canadian, no surprise. I mean, dollar's doing good versus yen, right? So that would lead it to believe that this is what I would consider pin action off of that dollar yen movement. That's this right here, right? Correlation's kind of the same. Whoops, sorry. Like this one right here, kind of the same in terms of correlations. Not 100% correlated, but pin action of one typically will move the other, right? Euro GBP right here, still within a daily based resistance getting rejected at the high. Obviously, this is a candidate of pin action. This has been really surprising here. So, I mean, it's just whew, I mean, obviously, look at all this high volume in here too. Look at that. Much higher, much heightened volume through this entire period of time. All of this. Look at the ridiculous move on at least a daily beyond the Bollinger Band. You'd have to look like a weekly on this. Actually, let me reset this. This is a great example, actually. Let's go to monthly. Let's get crazy, right? Let's look at this on a monthly. I guess crazier things have happened, obviously, post and pre-pandemic. But from the standpoint of a fairly well laid out, keep in mind this zone here, these are this custom Bollinger Bands here. See how occasionally we'll touch it, pulls you right back within to, it's almost a reversion to the mean. If you guys have never heard the concept, see how we'll ride the bands here up. Look at that. Just, I mean, this is pandemic. It's kind of hard to put any sort of pattern on that. Good support though at this 1.4900 area. But it is on a monthly chart. Let's take a look at GBP CAD. The Neo. Back to daily. Support 1.66. Let's take a look on a weekly. We're at it. Right there. Strength in the Canadian, at least in terms of the yen. Not really boding that well in this particular chart, huh? Hard to put a lot of any stock into this stuff as far as explanations. It's almost like I'm wasting all of our and my time explaining this, but I was just trying to find patterns and areas of risk and ways to explain things so that you can look at movements, at least in a very quick and generic sense from a macro overview, and be able to frame some sort of thesis surrounding what took place and why. And you can use that in management going forward. Let's see what else. Take a look at gold rocketing up when things get crazy, right? Right back inside the zone. So it's almost like, and this is a weekly chart. So this is a rejection. Things get crazy again, we could certainly reject, but it looks like we want to spend or need to spend more time in the zone auctioning here. I always love when the gold bugs get all happy and then things get crazy and prices go up, and then all of the usual suspects, Peter Schiff, all those knuckleheads on TV, they're saying it's the end of the world. Most of them are saying it because they want to sell you all their crazy newsletters, which are overpriced. If you're going to spend any money on anything, should be the macro compass, in my opinion, because it's economics written for the simple man. Let's see what else. I should say quality economics written for the simple man. Here's oil. No surprise. This was such a great generational short, in my opinion. Wish I had more time to focus on it. Looking at this chart on a monthly perspective, which is There we go. Many of you may remember when this was back up at this price. The highest, I think, what's the highest right here? I think it was like what, 140, 148? Is that right? Something like that, like all-time high. Yeah, just know that that's the area. This is a long time ago. I don't think anybody's standing up here defending this, obviously, but it's just an all-time high. Any of these huge century points on the price of almost anything, I remember when, Cisco Systems, was in the stratosphere and then spent almost a decade during a tech correction just doing nothing but, floating around in the doldrums, right? Where the stock had spent the better part of the 90s riding the crest, right, of growth. Um, the it came all the way back up to that point, and it was a huge selling, as we have already seen here. But I mean, outside the Bollinger Bands and oil on um, because I had a couple people say, well, why take a crack at this? What if oil went to 200 a barrel? I said, well, that's fine, but I said the only other time that we saw absolutely ludicrous trading, and there was a lot of inefficiencies, it essentially broke the CME system for pricing on this day. We've never seen a move outside of the Bollinger Band this big in over 2 decades. And you can see it right on this chart right here, right? Look at that. I mean, that's bananas. So what that means to the common person is that this gets so stretched, right? And it's like, wow, the rubber band should have broke like 10 feet ago, and now it's stretched out 100, right? So very little risk stepping in front of a train at this point because the train is going so fast, and it's like literally like pushing the boundaries of whatever the stretch is, and then it just gets snapped back and thrown back about 6 states of train tracks, right? That's kind of what happened on this. These are very low risk trades because it's what's called extreme outs on this stuff. Always much more tradable, but always make sure you do it with small amounts of capital. Something like that could be, you could use a double short ETF to accomplish that. Oil. What else do I want to do here? I think that's pretty much it. Let's take a look at crypto. Here's the daily. Still think we got some missing notches down here. Want to do some auctioning underneath this area, but it is really stabilized right in this area. Doesn't mean any whale can't come in and dump a large position, take the price and crash it through that. What was the recent bottom? 33 area. We're just not getting a lot of interest in buying this, even as we've had huge rallies in equities, right? There's been big rallies in, keep in mind, there's a ton of money that flows in this area, right? Some of the biggest on this planet outside of the currency markets. So if there was a roar up in equities and there really isn't that much boom getting back into crypto, what's that telling you guys? What are you reading on those tea leaves? Is participation waning? Maybe. Will it eventually catch steam? Possibly. Could Steve be totally wrong and it could rip to new highs? Certainly. But if you're a betting man, you bet on statistics, right? So if you guys are familiar with Texas Hold'em, where they're bringing a river down, right? you statistically, unless you are just absolutely amazing at reading people, like some of the best poker players out there. But if you're, just playing the game from a strategic standpoint, there's just isn't a lot of participation in, up in the bets as the river rolls around, right? So if that's the case, what are you going to do, right? You're either going to start bluffing or betting heavy that something's going to break one way or the other. I think it's lower. For those that are long this coin, I hope I'm wrong. But there just isn't the participation or love, if you will, at this current point. Doesn't mean some influencer can't come out and say something. That's always possible. That also is one of the biggest risks to trading this market. But I notice a lot of these influencers that were claiming to burn their house down and all kinds of other crazy ass stunts, they've all been much more quiet. And, it's almost like they've wrung every drop out of their coin um, campaign, if you will, and there's nothing left. Usually, when that happens, um, we start to come back down to earth. Now, I do think if that does happen, which we've been talking about probably way too much, if it does in fact happen, there's going to be a settling out point, which I hope somewhere in the, I don't know, 5 to 20,000 area coin. Everybody will just be so freaked out at that point. And when there's just bloody bodies all over the streets, that's when I start coming in and buying. And you'll hear me talk about that if we can reach that point. May take a while. There's going to be some falling knives. There's going to be some crazy videos of people jumping out of buildings. I hope that's not the case. But when nuttiness ensues, you usually see some of that. You, from the standpoint of an investor, want to see through that, right? It's almost like you're the horse, and I haven't used enough of these analogies, mostly because they think they're kind of mushy. But it's like you're that horse, and even though there's just, the jockey and the horse, I should say, even though there's just mud flying at you, right? You're seeing a path that nobody else is seeing, and everybody's going nuts. It's just, like just absolutely bananas mayhem, kind of like a horse race I like to see. And there's that one guy occasionally that just can see just ridiculous clarity through the noise. That's the kind of trader I think that's required in futures markets, certainly trading, manually trading a lot of currency, and certainly trading crypto. But from the perspective of somebody that just wants to be a buyer, yours truly, at a much lower price after it's settled out, right? And may not go lower. These things could base out like the previous wreck. It took us, 3 years to base out, around $4,000 a coin, and then the lift started. That's when you want to catch the ride. This doesn't pertain to just the coin. It pertains to anything you guys want to invest in. A particular market gets crushed, you want to let it settle out, begin to base. Remember, I talked a lot about William O'Neill and how he explains the cup and handle strategy of basing out. But you want to buy it after the liftoff, right? A lot of people are like, well, why wouldn't you want to buy it at the bottom? Well, because you just don't know if it's going to rally again and then start just heading lower, right? Like all those that were chasing tech stocks down in 2002 all the way into the wreck in the 3, and then subsequently in 08 as well, right? You just don't know where the bottom is. From a risk management standpoint, it is far better for you to see something just get clobbered and then just hang in the weeds for the carnage to be, or I should say, to reverberate through the sector that you're in, right? And at some point, once the forest fire, I'm using all these stupid analogies, take it, I love it. Once the forest fire is done burning down the planet or whatever, burning down a particular locality, you can begin to see the trees start to bloom again, right? So when you start to see that, that's when you want to tiptoe back into a market, not with your entire net worth, but with just a small piece. And you can begin to purchase on a breakout. Yes, you're buying higher than the lows that most of those assets got to in price, right? But more importantly, you have a considerably less risk of it going down. Where's your stop? Your stop's typically a couple of ticks under that break point higher. That handle you guys have heard me talk about a lot, right? You don't have to necessarily point it out on a price scale, but just kind of be able to envision that. This is the kind of things that before students would, so to speak, be graduated from some of my futures trading stuff in the past, I would want them to illustrate to me without using a computer. So once they can illustrate to me, that tells me that they're not necessarily going to get it right, but they know how to put a frame around any market's price action and be able to sort of read what took place, which gives you a considerably higher potential of confidence that it's going to do what you think, right? And in the end, that is about being low risk and a good trader. Wish everybody a great week. May the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.